Hi, this is Sive Morten with the daily update on EURUFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's take a look again at the euro currency. Well, yesterday I have missed a bit with the depth of the retracement, so I thought that market probably will test the weekly pivot point that was suggested by the probability. As usual, as you know, price gravitates to test the weekly pivot point before any other action. But yesterday market has found the support on the bit minor trade support on the 4-hour time frame and turns to the upside. So although I have announced a lot of suspicions about the diamond pattern that has formed on hourly time frame, now I probably will have to agree that it was really the diamond. Well, we will talk about this a bit later, but now let's discuss the situation on the daily time frame. Well, here trend is bullish. Market has returned right back to the monthly pivot resistance 1 and now is making an attempt to continue move to the upside. Now the working pattern is particular this ABCD pattern that marked with the blue circles. A, B, C bottom, D pattern that is completed around 134.30. Take a look at the harmony of this pattern. It's very harmonic. The steep of the legs almost the same, almost equal, and the depth of the BC leg is 618 retracement to this swing. That is perfect for the ABCD patterns. So this is a nice probability that market is really will touch the 134.30 area. Will it continue further? Will it continue to the 134.60, 134.70? Since this is the weekly pivot resistance 1. Well, from the current perspective, from the daily time frame, there's no problems with it. So this level is just slightly higher than this one. Market not overbought, so that is possible based on this action. But still, we have some nuances that and risks that makes this possibility not as transparent as it desired to be, because we have some pattern that is forming now on the hourly time frame, and depends on this pattern, market will continue move to the upside or it will fail around 134.30 and will show the respect of this ABCD pattern. But let's move through the research gradually. Now let's take a look at the 4-hour time frame. On the 4-hour time frame, we see this retracement that is the minor support that I have talked about, 134.64. As you can see, this is just the 3/8 support from that low to this high. This nice support is logical, but this is just few pips. Market hasn't quite reached the weekly pivot point, and 132.20, this usual target of the double repo, also hasn't been quite reached for about 30 pips. Market turns to the upside. Trend has turned bullish here. So we have the bullish trend on daily time frame and on the 4-hour time frame. Here we have the minor ABCD pattern, A, B, C bottom. The shallow retracement suggests some, if you could call it, strength to the upside. But one thing that I do not like that the CD leg, as you can see, flatter than the AB, even in the beginning of this pattern. That's why I have a look on this chart from the another point of view, from the point of view of the potential risks that carries current price action. If we will discuss the targets on the 4-hour time frame based on this ABCD pattern, what we see? First of all, the 618 extension stands 134.80. It's 20 pips higher than the weekly pivot resistance 1. And 127 extension of that swing from that high to that low stands 134.41. So that is cluster of the resistance area. So if market will take it out of this high and will continue move to the upside, then probably this will be the area to watch for 134.60, 134.80 as the potential our first target of this pattern. But now let's turn to the most interesting that is forming currently on the euro currency. So Let's take a look first at the 30-minute chart. That is our diamond pattern that, as you can see, has worked. Take a look what's going on currently. Market forming the bearish wedge right at the previous top. It's 134.04. Here we see the classical divergence with the MACD indicator when the wedge is forming. But also I would like to say a couple of words. If you remember, yesterday we said that if we are wrong and if this is really the diamond pattern, that is really is, what we should to do if market will show the acceleration and upward breakout. We said that we need to catch the first pullback of the thrusting move to enter on the long side of the market. So I intentionally left with no change this area because this level is the 3/8 support from that low to that high. So that was the first retracement after the thrusting up on the 30-minute chart. So if you have entered long here, that as we suggested, then probably you have the nice position. And now, since we have some risk, you could put your stop to the break even. Because now I would like to discuss with you the thin moment of the current analysis. You see that market is forming the potentially bearish reversal pattern. And now let's take a look at the hourly time frame. On the hourly time frame, take a look what we have. That is possibility for the double top pattern. Very often when the market forms the double top, the second top is slightly higher than the first one. This is some sort of the wash and rinse of the previous tops we have discussed in our Forex military school when we have discussed how to trade the double tops. That's why this double top doesn't contradict with the ABCD pattern on the daily time frame, because it has the target around 134.30. Just the 25 pips higher could be particularly the wash and rinse that is not stands in contradiction with this double top pattern. If market will show the thrusting acceleration to the upside and upward breakout of this wedge, then probably what could suggest the scenario with this on the 4-hour time frame development, since market in this case could proceed a bit higher. But be careful. So if you have now the long position somewhere from that level or from that level protected with the break even, today is the Friday, 134.30 is the target of the daily ABCD pattern. It could trigger the retracement that will be the intraday double top. This hardly will be the reversal, but this could lead some retracement on the hourly time frame, as the double top pattern suggests. So maybe it makes sense to take the profit today right around 134.30 area and to not hold the position through the weekend with the hope that market will reach 134.80, or control your risk as you prefer. Just keep an eye on this potential scenario, and I just would like to warn you about this possibility. So that's probably all for today. I will try to take a deeper look on the market during the weekend with our usual weekly research. But within current trading session, there are two moments to watch for. First of all, protect your position and watch for the development of this bearish wedge and how market will behaves around the 134.30 area. Will it lead to the double top, or market will accelerate through it?